Okay, something huge just went down in the world of finance. We're talking about an economic supernova, really, with its center right in Tokyo. And believe me, the shockwaves are already hitting the rest of the globe. So today, we're going to break down exactly what this is, and more importantly, what it means for you. So on February 8th, 2026, this number started flashing on trading screens all over the world. We're talking about Japan's main stock index, the Nikkei 225. And look, it didn't just break a record, it completely shattered it. I mean, it rocketed past the 57,000 mark, a level that, honestly, just a little while ago seemed like pure fantasy. Now, this wasn't just some random blip on the screen. Not at all. This was the direct result of a political earthquake, a huge shift that sent tremors from Tokyo through the entire global economy. So let's get into it. Let's unpack what really happened here. So, where did this all begin? Well, it started with Japan's first ever female prime minister, Sanae Takaichi. People call her Japan's Iron Lady. And she made a really bold move, a real gamble. She called a snap election, basically asking the people for a clear, direct mandate. And boy, did she get one. What happened next was, well, it was more than anyone saw coming. You see, her coalition didn't just win. They scored an absolute landslide, grabbing 352 seats. Now, you only need 309 for what's called a two-thirds supermajority, so they just blew right past that. To give you some context here, this is the best election result for any single party in the entire post-war history of Japan. It's historic. So you might be asking, why did investors go so crazy over this? It's pretty simple, actually. A supermajority takes all the political uncertainty and just throws it out the window. Suddenly, you've got a clear 4-year roadmap. It's like a green light for the government to push its agenda through, no roadblocks, no gridlock. And for the markets, well, that kind of clarity is absolute gold. But here's the thing. While the markets were popping champagne, the feeling on the street was a bit more complicated. You had some voters expressing real concern, worrying that winning too much could lead to, carelessness and arrogance. That without a real opposition, the government could get complacent. It's a really important reminder that a booming stock market doesn't always tell the whole story. Okay, so we've established that political stability was the spark that lit this fire. But what was the fuel? What's the actual economic logic that sent this thing into orbit? Well, let's dig into that, because analysts have already come up with a name for it. They're calling it the Takaichi trade, and really that's just a shorthand for this huge bet investors are making. They're betting that her specific mix of policies is finally the thing that's going to pull Japan's economy out of the slump it's been in for decades. So, what are these magic policies everyone's so excited about? Well, her agenda is definitely aggressive and all about growth. We're talking a massive stimulus package. Think over $136 billion. And it's not just throwing money around, it's targeted spending on the industries of the future, like AI and semiconductors. Then you add in some pro-business tax cuts and slashing red tape, and you've got a recipe that investors just can't get enough of. A good way to think about this boom is like a rocket with two giant engines firing at once. The first engine, that's the political stability we've been talking about. It gives her a totally clear runway to get things done. And the second engine, a weak yen. That makes Japanese exports, think Toyota cars, Sony electronics, super cheap and competitive around the world, which means corporate profits just go through the roof. All right, I know what you're thinking. A market is booming on the other side of the planet. So what? Why should you care? Well, here's why. The shockwaves from this Tokyo supernova are already hitting the Indian economy, and I mean in a very big way. Just get a load of this number. 6 lakh crore rupees. That is a staggering amount of money. It's the equivalent of Japan's 10 trillion yen investment target for India. And now, with Japanese companies swimming in cash from this market boom, well, let's just say that target is looking more and more like a reality. So let's connect the dots here, right? More profits over in Japan means there's a lot more dry powder, more capital to invest in projects right here in India. We're talking about things like high-tech semiconductor hubs popping up in places like Dolera. We're talking about joint AI projects to upgrade our railways. It's this perfect strategic partnership. Japan brings the tech and the money. India brings the scale and the talent. Okay, but, and this is a big but, this incredible boom doesn't come for free. There's a catch. And lurking just beneath all this excitement, there are some pretty serious risks that we really need to talk about. This whole thing is a very high-stakes gamble. And the biggest risk of all?
It's tied to this fascinating, kind of complex financial strategy called the yen carry trade. Think of it like the hidden plumbing that connects Japan's economy to ours. It can be great, but it can also be very, very dangerous.
So, how does this thing actually work? Well, the idea itself is pretty simple. Imagine you're a big global investor. You go to Japan and borrow a ton of money, yen, at a super low interest rate, maybe something like 0.75%. Then, you take all that cheap money, you swap it for rupees, and you invest it here in India, where you can get a much higher return, like 7 or 8%. That huge difference between what you pay in interest and what you earn, that's pure profit.
And that right there is the double-edged sword. On the one hand, you get this flood of cheap money from Japan pouring into the Indian stock market, pushing prices up and funding all sorts of new projects. That's the good part. But the danger, the danger is huge. What happens if Japan's central bank decides to raise its interest rates? Suddenly, that money isn't cheap anymore, and investors will panic. They'll scramble to sell their Indian stocks to pay back their Japanese loans, and that could trigger a flash crash.
And as if that wasn't enough, there's one more complicating factor we have to throw into the mix. All this ambitious spending that Prime Minister Takaichi is planning, it's being piled on top of an already massive mountain of government debt. Seriously, Japan has one of the highest debt-to-GDP ratios in the entire world. It just adds another layer of risk to this whole situation.
So, all of this brings us to the billion-dollar question, doesn't it? Is what we're seeing, the Nikkei at 57,000, just a massive, dangerous bubble that's about to pop? Or is this the actual, sustainable beginning of a new Asian century, one that's powered by a comeback story in Japan and a rising India? For now, here's what we know. The rising sun isn't just shining on Tokyo anymore. It's casting a very bright light, and it's absolutely fueling the engine of the Indian economy. But whenever you're on a ride that's moving this fast, with so many twists and turns ahead, it's probably a good idea to keep that seatbelt fastened.